Sundar Pichai once said that artificial intelligence will be one of the most important things humanities have ever worked on, even more profound than fire or electricity. Fire has changed how we survived. Electricity has changed how we lived and worked. And AI is set to transform each and every business on how business thinks, decides, and competes. History tells us that such shift do not happen overnight. It takes years, and it takes time for companies and investors to understand how to use the new technology well. Over the last 25 years, we have seen Indian companies adopted to major transformations like liberalization, formalization, digitization, creating some of the country's biggest wealth creators. Today, with AI, digitization, and manufacturing coming together, we are at another inflection point. The real question is not whether AI will matter, but who will use it the best. And that's where a fund manager perspective becomes really important. A fund manager not just look at the ideas and study them, they also allocate capital, live through the cycles, and separate long-term opportunities with short-term noise. And their insights are shaped by their experiences, what has worked, what has not worked, and how conviction is built over time. Hello and welcome. My name is Gaurav Malhotra. I am the co-founder and chief business officer at the Capbook. At Capbook, our mission is simple. We help investors make informed decisions by bringing fresh ideas, deep research, and differentiated strategies from India's most respected fund managers. And today's conversation is part of this journey. Understanding how India's new age economy is evolving and how investors can thoughtfully participate in this journey. I'm joined today by Keyur. Keyur Majmudar is Chief Investment Officer at Bay Capital. Bay Capital is an investment advisory firm which has a track record of more than 15 years in managing institutional assets. They have been early investors in several Indian new age businesses. Keyur looks at businesses with a long-term vision, spotting strong ideas with an opportunity and differentiating the temporary hypes. Keyur, thanks for being with us today.
Thank you, Gaurav. Pleasure to be with you today.
Let's start, Keyur. Let's start with a big picture. When you look back last 25 years, what has really shaped in the Indian economy from an investor's perspective?
Yeah, Gaurav. So once again, thanks for giving us this opportunity. So in some ways, our investing journey has spanned more than 2.5 decades. And while many things are different, some things are actually quite similar. And so we sort of launched our first India fund back in 2002, 2003. And at that time, many of the broader tailwinds or themes, if you can call it that were expected to play out, have now only accelerated, and even today we might be talking in different ways about a similar kind of theme, right? So for instance, financialization, right? I think the entire financialization of the economy, which was a very powerful theme 15, 20 years back, has now accelerated and is taking on a different form. So for instance, 15, 17 years back, one of the big tailwinds was this market share shift from the public sector banks to private sector banks, right? Where this huge generational market share shift was happening as many of the newer banks, Kotak and Axis Bank and all of that were sort of accelerating their growth. HDFC, ICICI, no doubt. And now in some ways, that tailwind continues, but the next shift is more on fintech, is more on NBFC scaling, is more on sort of the capital market intermediaries, if you like, right? New age brokerage firms, or some of these large wealth management practices which are now listed and significantly growing and gathering assets, right? So the point is, in many ways, the broader tailwinds are similar, but they are manifesting in slightly different ways. And this is sort of linked to, in some ways, to the point that you were making when you started, right? It was a very good introduction about how, changes are, happening slowly but surely, right? And finally, one thing which I always like to say is very relevant in the AI world is something that's called gradually then suddenly, right? So things happen gradually, and then you just feel, oh, suddenly something has dramatically changed, right? So these very big, powerful shifts, particularly on technology, happen in that way, right? It's gradual and then it's very, very sudden. So I think there's been a very defining change in India. And I think the next 10, 15 years are going to be very profoundly different in many ways from the last 10 or 15, Gaurav.
No, right, very rightful said. But I have one question to you, Keyur, that we have seen various wealth creators in past in Indian markets, be it Infosys or HDFC Bank or Asian Paints. And obviously, in their earlier years, they were not looking like obvious winners of future. Uh, what were investors missing in these these names at that point of time? Can you give us some example of past wealth creators and what have you learned from those past winners?
Yeah, so I think some of these names, right, were just very big uh, sort of macro opportunities that existed. And within that, you had these individual businesses which you named, which had very strong, powerful sort of competitive moats, if you will, right? Which allowed them to
Hmm.
compound over a long period of time. Now, what has happened is that these businesses were great 20 years ago, they were great 5 years ago, they are great today, and they will remain great in 5 or 10 years from now, right? But as scale kicks in, right, what happens is incremental growth from that high scale starts to become very, very, difficult, right? And so therefore, HDFC Bank, which was compounding earnings at 20 or 25%, will definitely compound earnings, but it will start to compound at a rate which is closer to the larger banking sector growth, right?
Hmm.
And that's what happens. And therefore, what happens is that your valuation multiples start to reflect that. Now,
Hmm.
that said, um, it's not that these will not continue to compound, but as the underlying economy has shifted, as the underlying economy has evolved, there are many more opportunity sets which have now opened up today for businesses which are in similar zones as an Infosys or a HDFC Bank or an Asian Paints was 15 years ago, right? And those
Hmm.
will then become the larger compounders over the next 10 or 15 years, right? So these compounding effects sort of shift as the underlying economy changes, right? And the right example is before Infosys, HDFC Bank, in the previous 2 decades they would have been, Great Eastern Shipping, Century Textiles, Baroda Rayon, all of those. Many of these businesses don't exist today, right? And that is the natural order of things. So, right, these large industrial groups, as the economy shifted towards services, you had a different type of business architecture which ended up doing well. And therefore, going out next 10 or 15 years, you will see the underlying economy itself shifting. And so there will be many more opportunities, right? That will get created, which
Yeah.
will lead to further compounding in the years to come.
So you mentioned about new businesses, new models of business, and this term of new age company obviously is very loosely defined. I
It's,
mean, how should investor look to define a new age company? Is it all about technology, or is it about mindset, scalability, and business model itself? If you can just throw on some light on how they're different from traditional ones, and I mean, what could signal a business is building something very durable and lasting?
yeah. So I think that's a very good question, right? Because what tends to happen is that, particularly in the present environment, we all tend to mix any new age stroke digital business in the same basket, right? So, something
Right.
that has been a startup over the last 5 or 10 years, you would say that that's a startup stroke new age business. and it gets put in the same basket as everything else, right? Now, in some ways, the common thing is that it's a startup that existed, which has scaled up and got listed, right? I'm talking about the listed universe. So that is the only thing which is common among some of these, right? I think as investors have matured, particularly public market investors have matured, it's important to, as we say, peel the onion, right? And therefore, our firm conviction is that just because something is categorized as new age, just because something is a startup, just because something has digital or is working in the digital economy, it is a great business and will deliver compounding shareholder returns, right? I think these things need to be broken down, right? So just because something is digital and new age doesn't mean it's a great business, right? And which will compound. So I think that's the first characteristic, right? From our lens, Gaurav, when we look at these digital businesses, right, we are looking at two or three things which act as a common thread between businesses that we think are interesting for us, which are scalable and which we believe can deliver compounding returns, right? And so some of these defining features, and this is not an exhaustive list, but it's more an illustrative list, right? I think first and foremost, we are looking for businesses which are solving very uniquely Indian problems in very uniquely Indian ways, right? And so therefore, these are not necessarily cut paste models of something that's worked in the US or worked in China, and you say, okay, this has worked in China, and therefore somebody will replicate it here, right? Because many foreign businesses have come into India and have just, closed shop and gone away because they are not able to understand the Indian nuance of doing business, right? And two examples are in the automobile segment, right? So many companies have come, tried to establish their businesses here and gone away, right? Because the Indian consumer is very different and difficult to work with, right? And the second is asset management companies, right? From the largest of the largest have come into India, have struggled to sort of survive and gone away, right? So we are looking in the digital space or startup space or the new age space, businesses which are uniquely Indian. So since they've identified a uniquely Indian problem, solving it in a uniquely Indian way, right? That's number one. Number two, these have to be, in our view, very large and dominant already, right? Um, and they have to have a very clear differentiators in their business, right? Uh, we don't necessarily like business which are operating in very cluttered spaces, right? So, for example, what is a cluttered space? So, in the fintech, the digital MSME lending space, right? If you think about that, some of these businesses are not listed, many are in the private space, but just to prove an illustration, right? There are many people who are digital lenders in the ecosystem who are lending to small and medium enterprises, right? Now all of them are saying we use technology, all of them are lending in that 3 lakh to 5 lakh kind of bucket, all of them are targeting a very large pool, no doubt about it. But beyond a point, it becomes very difficult unless you decipher exactly why company A, company B, company C are different from each other, right? What is that one point of differentiation that differentiates one from the other, right? It's not enough to say that we use AI and machine learning, right? That pretty much means nothing nowadays, right? So unless we can have a very clear identified advantage which is durable over time, right? That becomes very important for us. Number three, of course, is very disciplined capital allocation with very strong fortified balance sheets. And number four, of course, is businesses which have large runway for growth, right? So I think when we frame it like this, for us, the possible choice of businesses that we find which have these common elements then reduces, right? And that's our lens of looking at it. And nothing to say whether something is good or not good. It's just that this is how we think about things, right? And this helps us narrow down the funnel, right? Because, like I said, not every digital business is a great business, to be honest.
Got you. Got you. So, Keyur, that brings me up to AI, and let's talk about AI. Again, there's a lot of excitement, but there's also a lot of confusion at the same time. How important is AI for Indian businesses in reality, as you see on the ground? Is AI creating new businesses model itself, or are they improving efficiency and margins of existing companies, or both? And
Yeah.
as a fund manager, what needs to be visible before a AI adoption translates into a real investment conviction for you?
Yeah, so again, got a very good question and absolutely relevant in the times that we are in, right? And
Mm,
while like you said, there is a fair degree of excitement in the matter of a few days or few weeks, right? That excitement for many businesses should be turning into, I would not say, I would not say fear, but I would say deep reflection, right? And not just in India, globally as well, right? So, for example, globally, we've seen reports of SaaS companies getting hit very badly, right? Because a lot
mm,
of what they do can get completely sort of sidestepped, right? Through these agentic AI tools, right? So I think
correct.
the period has come for very, very deep reflection in many businesses. Coincidentally, Gaurav, I was talking to the founder of one of these new age businesses, which is listed now, which is a portfolio company for us, and which we have known for 5 years, right? And the first thing that he said is, Keyur, the world changed on the 5th of February, right? This is what he said. I'm just quoting, right? So we can agree, we can disagree, but he said the world changed on 5th of February. And that is the day that, this Anthropic and ChatGPT, right? They released their that newer versions of Codex and Claude 4.6, right? And for a tech business founder to say that in that way, right, is something that I would personally, as an observer and investor, take fairly seriously, right? So, so that is a very important thing. So,
Mm,
so the change is very real. What it means going forward will only sort of will only remain to be seen. But I think there are many businesses which certainly will need to think very deeply, right? And I think the questions being asked of Indian IT services, the traditional IT services companies, right, are right questions, right? We should not feel deeply emotional about that, but those questions are the right questions, right? Now, will these businesses continue to be around? Answer is yes. Will they be architectured differently in the next 3 or 5 years? Answer is yes, right? So I think the time of this massive hiring of 20,000 people, 30,000 people probably is not going to happen, right? They may hire fewer people in more specialized roles with deep domain knowledge and things like that, and that has a second or third order effect, right, if you think about it, on many different things for India. So I think that change is real. Now, what it means from an excitement standpoint, right? This is the fear and sort of the apprehension standpoint. But where the exciting thing happens is where uh, businesses which are digital first uh, and can use the power of this AI, right, in the right way very quickly, are going to be the sort of leaders and going to be ahead of the game, right? And I'll give you, and it doesn't have to be some small startup or some new age business. A simple example is Bajaj Finance, right? And we've been sort of tracking this business. We're investors for a very long time, and their entire commentary in the last 2 years has changed. So if you just look, it's in the public domain. Bajaj Finance now calls itself a fin AI business, right? And this is Rajiv Bajaj saying that in public domain. It's a fin AI business, right? And the way they are thinking and architecturing the business is for a world which is very different today and going forward 5 years versus what it was in 5 years, right? So they are way ahead of the curve in re-architecturing their business, right? So more and more of these businesses that can adapt and use AI, right? So India may be behind in the traditional sense of how we know of AI, which is large data centers and these large language models and things like that. But I can say with some degree of conviction that India will be at the forefront in the application economy, right? Because we have this huge user base, right? So the applications which sit on top of some of these models and are very relevant for India will be the real opportunity. And for investors, those businesses which use the power of this AI, some of these tools, and sit above them, interfacing with the customer, is what is going to be, leading to some very, very, very strong, outcomes for those businesses and therefore for shareholders over the next 5 or 10 years, right? And that is where our attention. So this founder which I spoke about, he's very clear in his mind that it's not necessarily just about simple productivity, but it's about efficiency, and it is about using AI for a whole bunch of things, and the entire business itself will get architectured around that, right? And that's the exciting thing. So our, as investors, our attention and energy is focused on some of those things, right? But yeah, exciting times and fear for some, excitement for others. It's a balance. Many things will evolve as we go along, Gaurav.
Understood. Uh, so, Kyo, let's talk about valuations as well, because I mean, often these new age themes trade at a valuation premium, and how investors should be looking at valuation in such environment, and what are common mistakes which investor does while getting into any of these thematic cycles of what we just spoke. Uh, Also, how important will be patience while investing in these companies, uh, whether it is whether the right time should be at the early stage of investment, or, and I mean, if you can just elaborate a bit on that.
Yeah. No, again, a very important and a good question, Gaurav. So I think what has happened is, and we have been fortunate to have invested across both the private markets and public markets in some of these new age businesses. So we think we have a fairly interesting and unique lens as to how these businesses have sort of evolved, and have got valued, right, in both private and public markets, right? I think what has happened is in the last 5 years, as many of these new age businesses have got listed, right, there is a certain maturing of the public market investor set also, right? That has happened. So if you remember the early days, right, the first cohort of businesses which got listed in 2021, early 2022, right? There was all kinds of excitement. There was massive mispricing on the upside, and then there was massive mispricing on the downside, right? And because uh, you know, public market investors, were a little unsure of how to value some of these, right? Now, to our mind, valuation lies in the eye of the beholder. So, you can't say, oh, 170 PE is bad, but 50 PE is good, right? Because in many cases, the E itself is not there, and we know this, right? I think the starting point, and this is how we think about it, is to understand the business and realize that in many of these high quality businesses, right, there is a certain non-linearity which happens, right? So, for example, the businesses which you spoke about earlier, right, which is Asian Paints, HDFC Bank, and Hindustan Lever, or a couple of others, right? There is a certain linearity in the business. We have used to HDFC Bank growing at 20% for 20 years, or Asian Paints growing at 18, 19% for 20 years. Right? There's a linear journey. In these new age businesses, the journey is never linear, right? The business journey is always exponential, right? Which means that the early years are marked by a lot of investment in building the platform, in acquiring customers, in ensuring those customers are sticky on the platform, on branding and brand building, on technology, and what that does is in that initial phase of 3 or 5 or 7 years, right, there is optical losses, right? Because the costs are upfronted, the benefits accrue over a period of time, right? So many investors make the mistake of looking at it and saying, oh my God, somebody is making 500 crore of loss or 700 crores of loss, right? How can this business be ever profitable, right? And to our mind, that disconnect, right, uh, is what provides the best opportunity, right? Because once you understand the non-linear journey, then you realize that after a certain tipping point, right? After a certain scale is hit, there is an operating leverage which comes in, which leads to these massive earnings changes, right? And if you look at, I'll just give you, two or three examples. Please treat them as examples. The disclaimer is it's not, investment advice or anything of that kind. If you look at Policy Bazaar, right? Policy Bazaar went from a loss of 600 crores to a profit now of 700 crores in a span of 3.5 years, right? Uh, Paytm, for example, went from a loss of, 1,000 or 2,000 crores to a profit of 500 crores in a span of 3 years, right? You're seeing similar journeys in many of these high quality businesses. Delivery, right, which is ultimately a logistics business, but has a very, very important tech architecture, which makes it an interesting digital first business, right? Went from a loss of whatever, 3, 4, 500 crores to a profit of almost 500 crores in a journey of 3 or 4 years, right? So understanding the business, understanding this front-ended nature of the expense and the back-ended nature of the revenue and margins and the profitability, and then having this long view, right? Of looking at the business and saying one needs to be in the journey over a 4 to 5 year period for the true benefit of that to accrue, right? Because in those shorter term frames, the business will continue to invest, and then, as we know, the compounding of those efforts comes over a period of time, right? So just like, as investors, our capital compounds over a period of time, even for business, right? The effort is compounding over a period of time, right? And it follows a very, very significant J curve like that, right? So I think these platform businesses need to be understood in that respect. One is patience, and the other is the non-linearity. Essentially, your expenses are upfront, whereas your the returns on those investments are coming, with a lagged effect, right? But when those come, the operating leverage is so significant that you have these massive shifts in earnings. And so therefore, finally, what happens is, as investors, if we were questioning, oh, how can this business have 500 or 600 crores of loss and even be listed, then we are all saying, but ये तो 500 crore का loss 2 साल पहले कर रहा था. How is this doing 600 crores of profit, right? How is this swing happened, right? So this ability to understand this, look for it, be patient, and stay invested is what certainly helps, right? And we've been sort of very fortunate to have been part of the journey of many of these businesses, Gaurav.
Sure. So let's talk about how should investor participate in this new age growth story of India. Is it better to focus on particular themes or individual stocks or a diversified portfolio or strategies? And what should be the time horizon in mind realistically for an investor? How should one think about volatility also during this journey of investment? Keyur?
Correct. So I think again, all very important and relevant questions, right? So I would say, not in any particular order, but the question around time frame, I would say to be an investor in some of these businesses should, one should have at least a 4 to 5 year view, right? Because that 4 to 5 year view smoothens out the volatility in the underlying company and the underlying earnings and gives the business enough time to be able to go up that J curve, right? So I think a 5 year span is something that is extremely important. Number two, yes, some of these businesses could inherently be volatile, but the volatility coming from the stock price is very different from the volatility coming from the business. And I think this is an important point. We all know this intuitively, but I think it's important to understand it and just re-emphasize it, right? There is the business and there is a stock price, right? And we've observed this ourselves, right? Very often what happens is in the initial phases of listing, right? The business is here, the stock price is here because there is euphoria and there is all kinds of expectation and things like that, right? And then there is a very big divergence, right, which leads to this temporary overvaluation, right? And as the business continues to scale, right, sometimes what happens is underlying volatility brings down the stock price, right? And so very often, right, very often you have the business which has gone from here to here. you have the stock price which has gone from here to here, right? And so this divergence between a stock price which is volatile versus the business which has actually become far better over a period of time, right, is what to our mind creates the best asymmetrical opportunity, right? So it is important to understand that volatility in stock price is okay. Markets will go up, down, somebody will sell, somebody will buy. As long as the directional journey of the underlying business is on the right track, eventually stock prices will catch up, right? And therefore the 5 years is linked to this, right? So I think that's an important aspect to keep in mind. Um, Number three, one of the best ways to sort of, you know, in our mind, think about these opportunities is certainly specific businesses, right? It is not about saying, larger digital theme, right? Because just because something is digital and new age doesn't make it an investable business for us with a, shareholder return profile, which can compound over a period of time, right? So it has to be stock specific, it has to be company specific, right? We cannot have it broad brushed. And the idea is to, sort of have that in a curated portfolio, which is, following a buy and hold philosophy over a period of time, allowing for that compounding to happen, right? And I think the two most important things which are overlaying all of this, Gaurav, is for investors to know what they are looking for. That's important, right? So to know what you're looking for, um, and then to ensure that once you get that business which has these interesting architecture points, which an investor might be looking for, I have described what we look for, somebody else will look for something else, then the only thing you can control is your entry valuation, right? So therefore, just as you have to have patience after having invested, I would say probably more patience before investing as well, right? To wait for that right opportunity where, like I described, this asymmetrical payoff, where the risk return is so skewed that it's sort of a bet that you have to take, right? Where the downside on something is 20%, upside is 300%, right? So in any situation, that investment is something that you have to make, right? There could be downside, no doubt, but it's so asymmetrical over a 4 to 5 year period that, that's an investment call that you have to take, right? And I think
Sure.
that's the most important thing, Gaurav.
Okay, one more thing here. So you talked about having a diversified portfolio. Now, does it fit well into clients' existing portfolio, which may be, let's say, a mutual fund core portfolio, which consists of majorly a traditional stock portfolio? How does this new age portfolio kind of help investors to improve his overall risk reward ratios?
Yeah. So I think, one important aspect in the way that we think, Gaurav, is that, one should not be thinking of this as sort of a thematic portfolio, right? In the traditional sense, right? That's number one, because while it may be a theme, no doubt about it, a theme also means that it is, sort of a fancy, right? Very often these themes are shorter term fancies and everybody gets excited about a theme, and then the theme does well for a period of time, and then sometimes maybe it vanishes, right? So we don't think about this in terms of a fad or a theme or something in that respect, right? We are saying that these businesses are inherently benefiting from this whole digital transformation on the economy, and each one of these businesses are so large and dominant, right, that they are becoming even bigger, every year, and over 5 or 10 years they'll become even more large and more dominant, right? So I think that's number one. Number two, I think as more and more of these new businesses are getting listed, right, I think it's certainly a good thing, right? And I always like to point out, Gaurav, that 5 years back the first cohort of businesses was Paytm, Zomato, Eternal at that point of time, PB FinTech, Delivery, those kind of businesses, Nika, of course, right? And from 5 or 6 businesses, that has now become almost 65 or 70, right? So our sense is that these 70 businesses will become 150, and the collective market cap also will sort of increase, right? And I think many traditional indices or many traditional sort of investors, right, maybe under indexed to some of these, right? Again, nothing right, nothing wrong, right? So it is not an either or. Our view is while those other investments have their own place, uh, and a portfolio like this, right, consisting of these new age stroke digital, actually acts as a great complementary fit into an existing equity allocation, right? Because it gives a different underlying business profile, it gives a different return profile, and in many ways it complements, right? Because the broader index or the broader market may not do too much, but you may have these individual businesses which do extremely well even in a difficult period, right? And I'll give you again two examples. It's an illustration just to make a point. If you see the broader market last 12 or 13 months, index has not been doing too much, but you've had individual businesses, right? For Paytm, for example, is up 100%. Car trade, for example, is up 100, 110%, right? Again, just to make a point, it's not to say anything else. But the point is that these uncorrelated returns, so to speak, can come from something like this, which becomes a complementary fit to an existing portfolio, Gaurav.
And actually diversify someone's risk reward ratio.
That's right. That's right.
Uh, Keyur, any final reflections on where do you look when you look at India today? All of your entrepreneur energy, digital infrastructure, manufacturing momentum, which is going on. What gives you the most confidence about the next decade, which is ahead of us?
No, I think what is perhaps the most interesting, right, is so the bigger picture journey, right, is sort of clear, right? Now we all know India will, today 4.5 trillion will become, 8 or 10 trillion, right? Now that is a journey. Now whether 10 trillion happens in 2029 or 2030 is a moot point, right? I think as long as the directional journey is on track, I think we are in good shape. So that's number one. I think number two, probably the most important thing is that in India today, not just the broader economy, but many underlying businesses, right, are very, very resilient, right? And I think one of the important or two important characteristics which have always defined good businesses, but that has become even more important now, right, is just resilience and the ability to adapt, right? So you have to continuously keep evolving, right? Because if you don't evolve, and as the old sort of business saying goes, right, unless you disrupt yourself, somebody is going to do it to you, right? And again, when you think back about a Bajaj Finance or some of these larger companies, right? I mean, Bajaj Finance has been around for the bluest of the blue chip NBFC, right? For it to re-architecture itself speaks volumes about how they are seeing the world in 5 years' time, and it's about resilience and adapting, right? As the world is shifting somewhere, if you are not shifting yourself as a business, right, then you're going to be left behind. That's for sure. So I think this resilience and this ability to adapt is what gives me, a lot of confidence in the future, right? Yes, there will be many businesses which will sort of falter, not grow as much, will disappoint. But at the same time, there will be many businesses which come out of the blue and, they will become much, much larger and much more dominant, right? And they will become monopolistic in nature, right? And we are already seeing the early signs of that, right? And many will surprise us, right? And finally, I think what's happening is, and what's giving me, a lot of confidence is again in the digital ecosystem, right? Many of these businesses, particularly the ones we look at and like, and have the characteristic which I've described to you, Gaurav, they are actually creating the market, right? So, these are businesses which are not just leaders, right? They are leaders which are creating the market, expanding the market, and as they are expanding the market, they are taking away a disproportionately larger share of the profit pool, right? And I think this is a very important aspect, right? that as dominant market leaders, right, you could fight for market share, right? And again, the thing is, again, just as an illustration, right, you could have, Hindustan Lever, right, in a certain market which is fighting for market share, right? But you may have a different market where the industry leader is actually expanding the market, right? So as you're expanding the market, you're actually getting a much larger percentage of the profitability pool, right? And these profit pools are therefore expanding, right? Um, and the classic illustration is Policy Bazaar, right? If you think of PB FinTech, right? The PB FinTech as a business didn't exist 15 years ago. Today it's got a 93% market share, right? So there is nobody else who's number two. And if you compare their growth rates, right, on health and term insurance, and you compare it to the industry, the numbers are so startling that it's staggeringly. They're growing at 50 and 60%, right? But the industry is struggling for even single digit growth. So they are expanding the market. They're getting a larger share of that expanded market, and that is all leading to expanding profitability. And this is what is the most exciting aspect of India, right? There will be these huge profit pools in an expanding market over the next 8 or 10 years, Gaurav.
Very well articulated and described, Keyur, with examples. So as we close, let me leave our listeners with the key takeaways of today's discussion. Uh, New age economy is a multi-year shift, structural shift, and maximum wealth is created not at the beginning or at the end, but during the lifespan of that investment over a long period of time. Secondly, it's not about size or age of the company. It's about mindset and execution. Every traditional business even can adapt to the new age technology and can be leaders of tomorrow. Third is building conviction in new age business require a different lens, as you described, beyond the conventional metrics. Uh, the fourth one is having a diversified approach is the most sensible way to participate in this whole journey. And new age business exposure should be complementing to your core portfolio and not replacing it, as you described. Thank you very much, Keyur, and thank you to the listeners. If today's conversation has made you reflect upon your portfolio positioning, whether it is participating in the India's next growth phase, it's a good place to start with. At Capbook, we work closely with investors to help them access to these thoughtful ideas, deep research, and long-term strategies from experienced fund managers. And if you'd like to continue with this conversation, we'll be happy to engage with you. Thank you for listening.
Thank you, Gaurav, for doing this, and thank you everyone for listening. Thank you so much.